All right, David, the red light came on. This is the most intense fundraising podcast interview of all time. Are you up for it? You feeling good? You into it?
So here's the deal. You probably don't know this about me, but I was actually literally in theater in high school, and I actually got best male thespian. So I am always on stage.
He's ready.
Great.
This is
Let's do it.
amazing. Considering most people get freaked out with that question, where they're like, "Wait, what?"
What?
No, I'm just kidding. I'm just kidding. It's all good. Well, let's go ahead and jump really into it. I always love to start these. I love to have like sort of a 90-second pitch. Number one, who are you, and what does your company do?
Yeah, appreciate that. So I'm David Duccini, founder of Silicon Prairie. We are a collection of financial technology companies really centered around the universe of helping other businesses raise capital at scale, publicly or privately.
Yeah, that's and you've been around a little while now. Where's like the sort of the origin story? Where does this sort of start to come out of the ground?
Yeah, appreciate that. So we've been around since 2016, right when the Jobs Act kind of, the rules became effective. We'd actually been working through on our state side. We're based in Minnesota on a state-based version of the crowdfunding rules several years in advance. And then, so yeah, we basically, opened up shop in 2016. So now we're like basically in year 10 at this point. The overnight success story usually comes in year 10.
Yeah, that's what I'm waiting for it any minute now.
Right?
I'm on 20
We've
years here. Any minute now.
Never been closer.
I'm right there. So let's maybe talk about core mission from where you were in 2016 to maybe where you are now. What's been some of the big shifts, changes, but what does it sort of look like from where you were to where you are right now?
For sure. Absolutely. And that's a great question. So under the state-based rules, the maximum amounts you could raise are typically $1 million or $2 million, depending on what state you're in. Obviously, regulation crowdfunding was capped at about $1 million forever and a day. Those caps got lifted, in the last, maybe it was 2022 timeframe, I think, somewhere on there.
Somewhere on there, yeah.
Yeah, it went to $5 million. And so, really the challenges all along have really been the cost of capital, right? Which we don't really sort of mentally factor in, right? They're like, well, I want to raise some money, but that, raising money is not free. Even when you're doing donations or rewards based, as you know this, right? It's not free. Right? So I'd say, for us, it's, we really been, pretty agnostic in terms of, which rule set we try and steer our customers to. It kind of depends on how much they want to raise, by when, and from whom they want to take the money. And sometimes for hyper-local deals, actually using a state-based exemption makes way more sense than using the national regulation crowdfunding rules, which can get stupid expensive for a variety of reasons around your financials.
Right. So where do you sort of see, on the tech side of stuff, on the banking side of stuff, like where does Silicon Prairie kind of fit into all of that? The platform, the portal, where do you sort of see the kind of the roots of what you guys really do?
Yeah, I appreciate that question. So one of the things that we've done, very early on is that we really play a different game than our contemporaries. I don't even use the word, competitors. We're contemporaries, right? These deals come in typically by referral, because people know, like, and trust you. So our platform has always been essentially available as a service, like first to our issuer clients themselves. So yes, while we have a platform page where you can come and look at deals, we know that that's not how these deals get funded, right? So we're all in on private label, of our stack, and then we also turn around and license that same stack to our contemporaries. And so today we actually power up 6 other crowdfunding portals, broker dealers, angel investment groups, family offices. And so the Silicon Prairie story is just slightly different. Like, we really are an infrastructure play versus a pure crowdfunding platform.
Sure. And where does sort of investment banking, ATSs, all of those kind of things start to fit into the tech stack as well?
Yeah, appreciate that. So again, it really comes down to how much capital somebody wants to raise, what stage they're at, right? And so again, you think about the life cycle of a business, like, we're really think of ourselves as being in investor relations as a service. In fact, if you go back and look at, and we just do this because we're getting ready to raise capital, as you know, went back and looked at our original business plan from 2016, found this little gem in there that said, and this is back in 2016, because we ran the numbers and we're like, we don't think running a crowdfunding platform could support more than a skeleton crew. Right. And we've seen that, like, based on our contemporaries, our financials. Yeah. So really, realistically is that this is a life cycle story, right? So you want to raise capital now. It's, it's your early friends and family round. Maybe it's your seed stage. Maybe it's your Series A. You've done raises before, and your investors, they're rolling along with you. And, the average company, it takes them like 12 to 15 years to get a meaningful exit, assuming they get to an exit, which is probably going to be an M&A transaction anyway. So, and as you know, our tagline is, an investment without an exit is just a donation. So
Yeah.
we're trying to solve that in creating essentially at least a platform where investors might be able to find some meaningful liquidity. We'll talk about how that looks, but fundamentally, we're really in the life cycle of the business, from essentially, the 2 guys in a basement with a good idea on up to, ringing the bell on Wall Street.
Yeah. So you mentioned in the beginning theater. What's the background? How did you get all into this? How do you go from, that to what you're doing now, and just kind of jumping into the crowdfunding world in general? What's the
Sure.
backstory?
Yeah, it's really sort of fascinating. So I actually became aware of crowdfunding before regulation crowdfunding. So wind the clock way back. Most people even sort of forgot about this, but literally on the books is what's called the Small Corporate Offering Registration (SCOR). It still exists on the book. Yeah, I mean, yeah, people forgot about it. Just SCOR, the Small Corporate Offering Registration. It's basically a state level version of a Reg D 504 offering that you file it with your state, and you actually file it in multiple states, which is kind of cool. And we've done several of these, and it allows you to then publicly solicit. So this is literally the grandfather of crowdfunding. And so I found out about this back in like the early 2000s. So I'm like going through some emails, and I remember like reaching out to a lawyer. And so always in the back of my mind, it's like, I think there's a way for us to do this public solicitation thing. And so I found in my emails, like, back in like 2002, I'm like, hey, I wonder if we could actually create an exchange for these types of things, right? And so, yeah, fast forward to 2014, we hear about the Jobs Act of 2012. We're starting to look around. It's not becoming effective. Nobody's doing it yet. So we get involved with a state-based program, get our own state-based law tuned in, which we added SCORE as an opportunity for state-based crowdfunding portal. So yeah, that's really the origin story. And that really falls out of so I had a previous business, like previous life, tried raising capital, and it was so horrible. I actually went and got an MBA. I mean, how horrible it was. Like, it's like, well, I know how to run a business, but I don't understand the language of business. So yeah, that's literally the short version. Like, I'm just kind of solving my own problems here.
Yeah. It's hilarious. It's hilarious. At one point, we will have to discuss that because that is my whole arch. I was raising my own money and I was like, this sucks. I'm going to go do it a different way and I'm going to figure this all out and just fixing my own problems is really what it is.
I mean, how hard
So
could it be, right? Yeah. Other than the fact it's complicated. Don't get me wrong. Like, essentially, I
Yeah.
joke and say I'm too old and too pretty to go to jail, which is why we do everything by the book, right?
Yeah.
I work with a lot of people who are too young and too pretty to go to jail. So yeah, so it's born out of sort of solving our own problem. In fact, the
Yeah.
first deal we did on our platform was for ourselves, which is allowed under the state-based exemption. So
Mhm.
we have always eaten our own dog food.
Yeah.
Yeah.
That's great. So you mentioned, and you kind of hit it a little bit that you're getting ready to raise money. So what is kind of the plan on that? What's sort of the strategy? How do you guys sort of think about, for yourself, getting into this and what are we getting ready to raise money for?
I appreciate that. So I like to always tell a story. And, I pitch our services all day long, so I'm eating my own dog food. So
Mhm.
we like to say that kind of, all fundraising from selling Girl Scout cookies or, magazine subscriptions door to door to raising seed capital, startup capital, expansion capital comes down to literally the slow conversion of social capital into financial capital. So our actually plan to raise money, the story actually winds back 3 years ago when I became very intentional about building up my social capital on LinkedIn, for example, where I had, originally, like 3,000 first three connections, and today I'm up to 35,000 followers. And that's just
Mhm.
part of a conscious sort of strategy. But yeah, so we've been sort of bootstrapped, a ton of my own money put in there. We've done some baby demo rounds, a few $100,000. We did an acquisition on the books. So we've literally built the full stack, like every piece of this thing. So we've got the funding portal, we have the transfer agent, we now have the broker dealer piece of it, we've got the alternative trading system. The last piece of the puzzle that we think we are missing is having essentially control of a baby bank. Like, we think if we have some kind of ownership stake in a bank, we can, one, not only de-risk the rest of the business because, debanking happens, right? Two, right, merchant processing, because again, merchant processing, everybody thinks that crowdfunding is high risk, even though when they hear crowdfunding, they think rewards are donation based. So I need to have a bank that can do merchant processing. And then really my hypothesis is if I help you raise money, hopefully you'll be sticky for other types of banking services, which sounds boring, but I love boring businesses, right? Lines of credit, SBA loans,
Yeah.
right? Payroll services, bill pay services, that kind of thing. So realistically, really what we're doing this for us is, kind of the natural evolution. And we were talking about this back in 2016, 2017. When again, we had a hard time trying to find a bank that could understand doing, escrow services
Sure.
for crowdfunding. So
Right.
the short answer is you want to raise a chunk of change. Part of the use of funds is to go buy a meaningful stake up to 20% of a little community bank, and then really start to take it through transformation as we then roll forwards. Really. And then for us, it's not even just for our own business, but literally de-risk all of our clients' businesses as well.
Sure. Sure. When a project has this many sort of tentacles off of it, how do you, one, stay focused on certain projects in it, certain verticals? How do you also explain it to maybe more laymen or maybe people who just don't understand it? You and I have been talking about this probably since about 2016, so we know the world here, but how are you sort of articulating the different verticals that you're going down, why it makes sense, and also, as we're talking to all goldfish out there, how are you getting them to actually understand why you're doing this and why you're going down this route?
Yeah, no, for sure. And look, we have a joke, we have a hashtag, it's complicated. Maybe eventually when we raise some money, we'll get some swag and some coffee mugs like hashtag it's complicated because we'll like we'll go through this explanation. Like, yeah, you know what? It's complicated. We'll get you there. So
Yeah.
I mean, so obviously, there's a story arc with every business, right? So let's say you're like a little local coffee shop and you want to open a second location and you go set, call up your banker and set an appointment. You're rolling with your business plan. And they're like, oh, this sounds great, Ever, but now would like, can I see a personal financial statement or whatever?
Sure. Right. Right. Right.
Or maybe they say, okay, you can get an SBA loan, but you need some capital first to go in the thing, right?
Hmm.
So realistically, this is an iconic example of where I think crowdfunding really sort of fits in. And when I use the word crowdfunding, we know that the word crowdfunding's in one of the rules, regulation crowdfunding. I
Hmm.
actually just talk about the ability to publicly solicit, right? I mean, this is literally the first version of going public. I mean, you are literally going public, right? I mean, you've got shareholders, responsibilities. So let's say that, the little coffee shop wants to raise some capital. The bank won't bank them, or maybe the bank says, okay, yeah, we can do this, but you need, 50K, in equity. I mean, you can go tap in your 401k, which I don't recommend, right? There's a whole industry that it's called ROBS,
Yeah.
roll over for business start. The word ROBS is right in the name. Don't rob from your future. Anywho, the point is, so this is where I think, something like crowdfunding comes in, right? You think about your stakeholders, who does well when you do well, right? And that you've got essentially the social capital. And so, the beautiful thing about this space is that, early on, they talked about it being equity crowdfunding. That can really be off-putting to some founders, especially control freaks, right?
Mm-hmm.
It turns out it's really investment crowdfunding. In fact, our friends at the CFPA want to call it regulated investment crowdfunding, which is good. But the point is
A
that,
mouthful.
yeah, it is exactly. The problem is that it's RIC. It's like Rick. I just think like Rick rolled is going to come in.
Yeah. Yeah.
Rick roll, right? Never going to give you up. Um, so the reality is that, crowdfunding, this is a great place for that. But the other part of it too is that it doesn't have to be just these baby local businesses, right? Again, it may not make sense. Like this may be a business that's never going to go public, right? But they're a good cash flowing business. Now, for the longest time, service based businesses really couldn't get their head wrapped around crowdfunding because again, they're not brick and mortar, right? But if they're a service based business, this is where something like a revenue share agreement really makes sense, right? It's simple to understand. Give us some money. I'll give you 2 times your money back over time, right? Fingers crossed, and then when we're done, right? And that's where service-based businesses could buy out their competitors or, buy
Mm-hmm.
adjacent businesses, that sort of thing. So, like I said, it's complicated, but, the beautiful question and the one question I always ask when I'm on a call with somebody, even if I know nothing about their business, the one question I found that will just cause people to open up and blossom is just ask them, "What does the next level look like for you?" And they will tell me, right? This is the level, or this is the barrier, or whatever. And like
Yeah.
I can figure out with that one question what kind of business they're in, and then from there, right? Okay, what's the next level look like for you? How much money could you practically put to use in the next, 6 months, 12 months, whatever?
Mm-hmm.
Versus like trying to say, well, I'm raising $10 million for my lifestyle business, or I just need to have enough money in the bank to pay salary for the next 3 years. Like that's not investable.
That is not. As we think about like investors' sort of mindset around this, how do you see sort of investors thinking about one, what you're doing, just at top level, just that sort of understanding, and then just maybe investors sort of maybe their temperature right now on the space from your vantage point.
Yeah, no, that's a really great question. So, the first part of the question was, how do people think about our deal? So we're basically claiming that we're not really a fintech company. We're using a
Mm,
phrase called cap tech, capital
mm,
technology. And so we really are trying to. So fintechs are usually typically consumer based, B2C kind of focused. They fit somewhere in the infrastructure rail. They're going to make lower costs or faster delivery. So we're really a cap tech story, capital technology, like essentially from capital formation, right? So including things like cap table management, right? Capital formation, investor relations, secondary markets, follow-on investments, seed round, bridge rounds, eventually to an exit, where hopefully from a virtuous cycle standpoint, that now, call in rich founder will start to dump money back into the economy, in forms of becoming an angel investor themselves.
yeah.
So that's really, our story. And I think that's really resonating with people when they really sort of look at this. Like, okay, now it kind of makes sense. Okay, you're not just a crowdfunding portal. You're not just a broker dealer. You're not just a
Hmm.
transfer agent. You're not just a portal as a service provider or whatever. We're really part of the capital technology stack, the life cycle of the business.
Right. Right.
Now, I mean,
And then yeah, the investor side. Let's go to that one. Let's think about those investors right now.
yeah. So, the reality is that, I think the sentiment is mostly the same. And I think, a little bit of the bloom is off the rose. I mean, we've now had, regulated investment crowdfunding, Reg CF now live since 2016. It's now 2026, 10 years in. Like, where are my exits? Where do I get my returns?
Yeah,
Like,
right.
was this just a donation?
Yeah,
And
yeah,
so I think people are, we've seen just some of the numbers that came out. There was about, 500 million last year. Deal counts are down, but the volumes seem like pretty good. So kind of the flight to safety. Think, again, the novelty is sort of worn off. And I think investors now are a little bit more savvy. Like, okay, what am I looking at here? Like, okay, is that, and they're asking tougher questions. So I do think that, and that really, fundamentally what hasn't changed is that first and foremost, people invest in people they know, like, and trust. Right. They may not understand your business model, and they may invest for a variety of reasons, not even for financial necessarily. It's like, Jeff, you walked my dog last summer, so here's $1,000 for that social debt. Right. The second money, like, they don't know you, but they know someone who does know, like, and trust you. And then, and you know this very well, the third rail or the third wave or the third tranche, if it ever comes, is from found or paid media attention. They don't know you. They don't know anybody that does know you, but they like your business model. They like and understand your business model.
yeah.
And so I think, so while the number of investor counts are going down a little bit, the average investment size is going up. Now, some of that's, is being drafted up from real estate. Real estate is, there's a few of these segments that are kind of like unicorns, right? Real estate,
Hmm.
for the longest time, breweries. People love breweries,
Yeah.
right?
Yep.
The kind of the downswing at the moment, but real estate and crowdfunding go hand in hand. It really does, because it's an asset that people understand, and they're willing to write bigger checks. Like, we hosted on Silicon Prairie, we did 3 deals for this group. They'd only done Reg Ds before. They took, crowdfunding out for a spin, but they had a $10,000 minimum investment, which is unheard of in crowdfunding platforms, and they
Yeah.
crushed it. They
Right.
totally crushed it. So I think yeah, the short answer is, one, it's complicated for some people's stories, but two, I think investors are a lot more sort of savvy, and they're starting to ask the questions and trying to figure out. I mean, that's where I really do think crowdfunding, is a winner, is that we're all kind of smarter collectively than any individual.
Yeah, I agree. How does the regulations sort of work in your space as you're growing and shifting into all these changes? What does it look like with the SEC and FINRA? How do you sort of navigate those waters? And is there threat around what you're doing as an investor looking at you going, how are you regulated in your space?
Yeah, that's a good question too, for sure. I mean, so look, it's highly regulated, right? We've got regulators, and it's not even just, I mean, I see people think SEC and FINRA, right? So we're a member of FINRA, which is, a voluntary organization, even though they're a monopoly. We also have state-based regulators that we sometimes run into, and so yeah, it's a highly regulated space. And so, but regulatory threat, is there. But again, if you read the rules and you actually put in the right kind of guardrails, you can be, essentially covered. Now, the risks are, if we were in essentially the previous regime, where it was essentially broken window analogy, like, broken window will come and smack you down, right? We seem to be in a lot more, I'd say, relaxed state. I think the next, 3 years are going to be pretty transformative, in
Hmm.
terms of, the regulatory light touch, right? And so I think I think we're actually good there. Fundamentally, the space is all about disclosures, right? And we just saw the departure of one SEC chair who literally thought every investor was a child who had to be protected, right? Won't name any names. Crenshaw.
Yeah.
But edit. No, but I think the reality is this. I think as long as we have really good disclosures, and I think if the regulators, at least on the SEC side, they seem to be relaxing. We'll see what happens with FINRA in terms of, their enforcement actions. Again, there's this idea that they are there to protect you, even though literally nobody hired them other than me to be their member, right? Which I have
Right.
to remind them is, like, you understand, like, the investors didn't hire you to protect them, right? It's not your job to tell consenting adults what to do with their own money, right? So yeah, I do. The good news is, I think the hints are that regulation crowdfunding is probably going to get another bump up, right? So $5 million again, and the rules. What makes regulation crowdfunding so expensive is, one, the need for, the Form C. If you go look at the Form C up at the
Hmm.
corner, it says, so this will take you about 50 hours to write, which it
Yeah.
can. Now, run the number against what your lawyer's going to charge you. You're like, wow, this is
Right.
super expensive, right?
Yep.
But I do think so. And then it's the need for accounting, right? The rules for accounting, I think, are way too restrictive. During COVID, they took that minimum up to $250,000, whatever, and it was actually go days, right? And and shrunk down the period for when you could release the funds and that sort of thing. And I wish they
Yeah.
would have left that in place, right? This idea that you can only raise 124K on your own financials, and then in GAAP accounting format, you have to explain what GAAP is, and then by the way, are you accrual or cash based business, right? And so the need to have your reviewed financials, up to $1 million is kind of ridiculous, right? So literally
Yeah.
every state-based crowdfunding rule allows you to raise up to $1 million on your own financials, does not be in GAAP
Hmm.
format. So I think that's one of the headwinds that we're sort of facing. But I think the sentiment is they're going to take regulation crowdfunding and bump it to 10, 15, maybe as high as $25 million
Mm.
where that first tier one Reg A used to
Yeah.
be,
Hmm.
and then
Yep.
take the Reg A and blow it up from, five to maybe
Right.
150 or 300. So
Right.
I think that's what, from a regulation standpoint, I think that's what we're.
Interesting. Yeah, interesting. How are you guys thinking about right now about blockchain, tokenization? Where does that sort of fit into your ecosystem of tech?
Yeah, thanks for asking. So that was literally again an article we put our entire roadmap out in a news article back in 20 May of 2017. It's posted online. It's easy to find, called the
Hmm.
Moonshot. And we literally been thinking about, tokenization, private blockchains, the idea of using shareholder rights, that sort of thing. So in our model, we really think it's an issue between the issuer, the one who's raising the capital, and their investors. In our model, we put the transfer agent, kind of in the catbird seat there to watch it. So we've got a design for a non-custodial system, which just means like there's nobody with one single control switch, right? So let's say, you're an investor and you invested in a business and you're not an insider and you want to sell your stock, whatever. All it takes is you and the issuer, or you and the transfer agent, to sign off on the transaction, and you can ship it, right? So it's a very clever design. It doesn't require smart contracts and that kind of stuff. And so, as I remind people all the time, look, this is not a technology issue. It's never been a technology issue, right? It's
Hmm.
always a regulation issue. And people don't, and all the technologists, God bless them, right? They're like, well, I understand all the tokenization and Bitcoin, and I can just set it and go, right? Cool. Yes, you can do that, right? You can also do it with a Google spreadsheet, by the way. The reality is that, these securities often have restrictions. You're not allowed to do a transfer, inside of the first year. Well, it's like, well, let's put a smart contract and blah, blah. It's like, well, okay, fine, but there are three ways you can sell it in advance of that year, back to the company, family member, or to an accredited investor. And so, like I like to say, look, it's complicated, but it's also not a technology issue. It's literally an issue around regulation.
It certainly is. What is sort of your roadmap milestone right now for maybe the next 6 months, maybe even a year? What does that sort of look like right now?
I appreciate that. So yeah, so the roadmap for us is that this year we want to, acquire a 20% stake. It's a meaningful stake, doesn't require approval necessarily from the regulators in a community bank. Make sure that that bank's, platform, the banking core, as they call it, is basically up to snuff, that the user experience is modern, right? And then really get that bank, positioned for doing merchant services, getting a Fed master account, potentially looking at things like, tokenized deposits, stable coins. We think that's actually the first play, is actually as an interbank settlement rail. So that's essentially what we think is, for us, with the good use of the funds, that we're looking to raise for, is for that bank. Then get it set up for an M&A flywheel. Like, we really think over time, sometime in the next 3 to 5 years, because we built our own stack, we understand software. I've had a privileged opportunity for the last 6 months to be a fractional CIO at a baby bank. You can look that up on LinkedIn. And I can tell you that, our funding portal software is about 10 times more complicated than your classic bank software. So I think the real play here is, and this isn't part of our exact roadmap, but I think we could slowly replace the bank core software with software of our own design, which then takes off the number one expense that a bank has after payroll. And so I think, and then that would just set up a flywheel. Like, we can go and just go buy up the baby banks and just take that cost off their books and make the combined entity more profitable. So that's I think the long search strategy for us, is to really sort of expand the financial footprint, right? Because again, people in the crowdfunding portal space, like, you're a one-trick pony. Like, you're there when they
Yeah.
raise capital, and then, you hope they come back and
Right.
raise capital again. We're really a the overall life cycle business of, let's help them raise capital, let's help them look at, debt products, right? And then that long term relationship is really
Yeah.
where I think it's at. And then, of course, just white label all of it. Like, again,
Sure.
I will literally, I'll offer my competitors office space if they want it. Like, here's the stack, here's the mobile app
Hmm.
with your brand on
Yeah.
it. Oh, here's a desk, here's a phone.
Right. Yeah. How do you think of objections right now? Are you hearing anything that like you're trying to make sure you get out ahead of? Is there anything that you see as something that you could stub your toe on right now? And just how do you sort of navigate and think about that?
You're talking about for our own raise, or are you talking about the space?
Just for your own
Oh,
raise in
yeah.
general,
Yeah.
just or the space a little bit too of just like, hey, these are the things that we're keeping our eye on, basically.
So that yeah, it's interesting. So I had a conversation I think earlier this week, maybe it was on Monday, or maybe it was like last week with a potential investor, and they're looking at like kind of the overall plan. Okay, so cap tech, okay, I understand that. We do cap table management. Sounds like you guys could be a carta killer. I'm like, it's
Right.
possible, right? You
Yeah.
said it, not me. Well, now I'm saying
Hmm.
it. So and like, okay, so then we see the bank piece of it. Okay. And then there's investor communications, and then there's investment banking services, and then there's going public. It's like, oh, it's like, I see you want to buy all these companies and combine them together. I'm like, okay, stop. We already have all of these pieces
We
right
already have
now.
it.
I just need
Right.
the bank piece of it. So I think
Yeah.
the challenge, and we joke about this all the time. Like the challenge is like, in theory, we could go and raise money for just like any one of the things that we do, like our whole
Hmm.
crowd builder system, right? The social capital engine that we wrote. We have a smart document automation system, right? I mean, literally. And so we think there's a little bit of it's like, I won't say it's a credibility gap, but I think they think it's incredible. And the funny thing about the word incredible means not credible, right? So we think what we're doing is incredible. So it's going to take a while for people to kind of see and feel it. So I think that for us is going to be kind of the headwind. I think people are going to be, they're going to be kind of surprised. Like we were just doing a calibration between us and one of the top, funding platforms who's going through an existential crisis. I won't name them, but they've raised like $69 million. They're doing pretty well from a revenue standpoint, but they're literally just a crowdfunding portal. To date, we've spent, with mergers and acquisitions, cut about $3,000 or $3 million roughly. We've got like 5 lines of businesses, like, and so we've got some real resiliency built in. Now, I do think that if the economy goes one way or the other, these two things are true, and this should resonate. One, people are always going to have a need to raise capital, right?
Yeah.
Regardless of what
Hmm.
the economy says, right?
Yep.
Investors will always have a need to deploy capital profitably, right?
Hmm.
So I just think we should just get in the middle of those two crazy kids, right? So I think that if there is something, if something happens, on the economy side, we would just flip over into a debt-based platform, right? I think that's really, that's where I think, and so we can basically ride, essentially the equity versus the debt side of things. So that's what kind of my sentiment is on, on the space. I'm very bullish. I love the fact that, it sort of takes power away from the legacy Wall Street apparatus.
Hmm. Hmm.
And that, the good news is that even most of that, including Main Street banking, those people that are in those positions, they're going to retire or expire, right? And so one way or the other, the nice thing that blockchain has demonstrated is that it doesn't really require consent, right? I mean, if someone could kill Bitcoin, they would have done it by now, right?
Right.
So
Right.
that's why
Right.
I'm excited about the idea of really putting that cap table, onto sort of blockchain-based distributed ledgers, and really letting people, to have control over their own assets and destiny.
Yeah, it's very cool. So, where can people kind of dive in, learn maybe a little bit more about yourself as well as the company and these upcoming raises? Where should we send people right now?
Yeah, I mean, LinkedIn, easy to find on LinkedIn. And then from there, like our main website, to kind of tells our story, sphi.io, Silicon Prairie Holdings Inc.io. And so those are the two. But LinkedIn is probably the best, easy place to pick up, send me a connect request. I'm an open sort of LinkedIn. I'm not a lion, but I'm certainly, I would certainly take the connection request, as it were. And I appreciate that. And so that's the easy place to kind of get the updates. And then you'll see that, that really, we do have a very high say-do ratio at Silicon Prairie.
Yeah, it's very cool. For all my listeners out there, you guys know I put all the links in the show notes, so we'll have that all, in the notes here on YouTube and in the newsletters and stuff. So, David, I appreciate you taking time out of your day. Unbelievable stuff. I've always appreciated your brain and how you're thinking about this stuff, because it is what this industry really truly needs, from
Appreciate
top to
that.
bottom, as somebody who's been playing in it as well, and
You gotta do a
fighting the
lot of
same
work.
battles that you have. So, yeah,
Appreciate that.
very
Thanks
cool
so
stuff.
much.
Awesome.